Stocks ended Wednesday little changed, as major indexes failed to stray far from the unchanged mark, with investors digesting the impact of two conflicting sets of jobs data and a report that said President-elect Donald Trump was mulling a national economic emergency declaration on inflation. Inflation is the wild card in 2025. There are lots of things that potentially have the risk to shift inflation back upward, said Charlie Ripley, senior investment strategist for Alliance Investment Management. The minutes of the Federal Reserve's December 17th to 18th meeting showed on Wednesday that officials saw a rising risk that price pressures may remain sticky as policymakers began wrestling with the impact of policies expected from the incoming Trump administration. Market sentiment was fragile after a CNN report said Trump was mulling building the new tariff program by using the International Economic Emergency Powers Act, which authorizes a president to manage imports during a national emergency. Benchmark 10-year yields peaked at 4.73%, the highest since April 25, to retreat slightly to 4.681% later in the afternoon. Ahead of Trump taking office later in the month, concerns about potential surcharges on U.S. trade partners have kept investors on edge as Trump's policies, including mass deportations and tariffs, could stoke inflation pressures. According to preliminary data, the S&P 500 gained 8.49 points or 0.13% to end at 5,917.52 points, while the Nasdaq Composite lost 10.96 points or 0.06% to 19,478.72. The Dow Jones Industrial Average rose 93.75 points or 0.22% to 42,622.11. Most of the 11 S&P 500 sectors posted modest gains, led by the healthcare index. The Russell 200 index, tracking domestically focused small-cap companies, dropped. Mega-caps were mixed with Microsoft up, while Alphabet and Meta fell. Investors also assessed an ADP national employment report that showed private payrolls growth slowed sharply in December, although a separate Labor Department report said jobless claims for the previous week fell. The Fed has stayed put on interest rates, and traders now expect the first trim this year in either May or June, according to the CME Group's FedWatch tool. Worries about higher inflation following upbeat economic data weighed on the benchmark S&P 500 and the tech-heavy Nasdaq on Tuesday, when the indexes logged their biggest daily declines since the Fed's December meeting, in which the central bank issued a cautious stance on upcoming interest rate cuts. Markets will be closed on Thursday for a national day of mourning to mark the death of former President Jimmy Carter.